So this is problem 5-6. We're asked to prepare a statement of cash flows. This is somewhat similar to exercise 5-17. So these are all beginning balances. We're told about these extra additional pieces of information. So what I'm going to do first is I'll go through and set up this question. I have a blank statement of cash flows right over here. My beginning cash balance is 20. I do not know my ending cash balance. I'm going to have to go through and figure it out. And the other thing I'm going to do now is go ahead and then basically figure out how I should be going through and then basically labeling these various different accounts. So let's go through and start that up. Okay. So the first thing we're going to do in this type of question is we want to go ahead and we want to put in the beginning balances. We'll then go through and do the statement of cash flows, and then we will do the balance sheet. So let's go ahead, and we are given December 31st balances, which become the January 1st balances of the following year. I'm not concerned with cash at this point in time, but we've got accounts receivable, opening balance of 21,200. My investments had an opening balance of 32,000. Plant assets, this is going to be interesting. Net, okay, this is 81,000. What does that mean? It means that it includes accumulated depreciation. So I'm going to basically mark that out over here. This will be fun. So land is 40,000. So this 81,000 is obviously the amount of the plant assets. And then there was some, this includes the deduction for accumulated depreciation. So I'll have to figure out how to back that out. So accounts payable, beginning of 30. And then over here, notes payable long term is 41. Common stock, 100. And then retained earnings is 23,200. Okay. So Lansbury sold off part of its debt investment portfolio. That means that they had an asset for $15,000. This transaction resulted in a gain of $3,400 for the firm. The company classifies these investments as available for sale securities. So the cash proceeds, so if I was to do this as a journal entry for number one, so I sold the portfolio for $15,000. Then over here, I had, so I'm getting a cash. Okay, so here I had a gain of 3,400. We're going to be recording gains as credits. So that means the amount I was carrying the investment for in my portfolio is going to be 11,600. Okay. So right over here, what I'm going to go ahead and do is I'm going to show the cash coming in. So in my big T account, I've got operating, investing, then I've got financing. So we're going to have sale of investments. This is going to go in the investing account. So my sale from my I should say sale of investments is going to give us over here at 15,000. Okay. So the gain is going to be directly recorded in the operating section as a reduction. So my gain on sale of investments. This is going to be for 3,400. Remember, when we're doing a lot of these additional information type items, we're going to be posting it directly into the T accounts. So similar to a sale of assets, if we have a gain from a sale of an asset, that's going to show up as a credit in the operating section. And then lastly, for investments here, I'm going to be crediting this for 11,600 because that was my initial cost. Okay. Attractive land was purchased for $13,000 cash. So I guess what I need to do here is to make all these in thousands, or else I'll run into trouble. Okay, so I purchased a tract of land. Go ahead and hide this for a moment. Okay, so I purchased a tract of land here for $13,000 cash. Okay, so for right here, so over here in investing, I'm going to do the opposite to cash, or as a credit. Long-term notes payable in the amount of $16,000 were retired before maturity by paying $16,000 cash. So notes payable. Okay, so this is going to go into my financing section. Let's see, retirement of notes payable. And this is going to be $16,000. Okay. So the next one right over here, an additional $20,000 in common stock was issued at par. So over here, so I'm going to go ahead and debit common stocks, a sale of common stock, $20,000. Okay, dividends of $8,200 were declared and paid to stockholders. So this is $8,200 as a debit to retain earnings. So payment of a dividend, $8,200. Okay. Net income for 2020 was $32,000 after allowing for depreciation of $11,000. So this means it includes the depreciation expense. So here for retained earnings, I'm going to be recording this $32,000 here as net income. So over here, net income, $32,000. Okay. My next step over here, though, is that it tells me that I had $11,000 of depreciation expense. So to record that, I would be debiting depreciation expense and then crediting accumulated depreciation. And I'll be going through and debiting that. Okay. So land was purchased for the issuance of $35,000 in bonds. So this is what we call a non-cash transaction. I would be debiting land, and I would be crediting bonds payable. Okay, it's over here for $35,000. And under my non-cash transactions, we acquired land of 35 for $35,000 by issuing a bond for $35,000. Okay, so let me just clear out some of this stuff down here. Okay, so that was number 7. At December 31st, 37,000 cash was 37. Oh, it actually tells us the cash. 37,000 accounts receivable was 41.6, and accounts payable remained at 30. Okay, so this is gonna be a little bit more interesting. So my accounts receivable was 41,600, and then over here, my investments were, so cash was 37, accounts receivable was 41.6, and accounts payable remained at 30,000. Okay. Okay. So as I go through and do this, prepare a statement of cash flows. So this will actually be a way we can go through and check our work. So my ending cash balance was 37,000. Okay. So my total change in cash is going to be what plus my beginning gives me 37. It's going to be 17,000. So what I need to do is to finish this up here. So when I look at accounts receivable, to balance this out, I'm going to need a debit of 20,400 to make this balance. I do the opposite to cash. I'm going to call this an increase in accounts receivable. The investments account, beginning of 32, ending of 11.6. I've already dealt with this 11.6. That was from the sale. There's nothing else that happened with plant assets net aside from this accumulated depreciation. So I'm just going to go ahead and leave it. Over here, my land was 88,000. Nothing happened here with accounts payable, so I don't need to adjust it. Nothing else happened here with notes payable, and I've already dealt with the common stock. And so over here, ending retained earnings is 47, and my ending balance in bonds payable is 35,000. So what I need happens is when I go through and I make sure that the total change in cash so my total increase or total, I should say net cash provided by operating activities. This here is going to be 19,200. It's provided by. Here I have net cash provided by investing. And then here for financing, I have 20,000, 16, 8,200. So this is my net cash used in financing activities. And this is going to be 4,200. So when I take my net cash provided by operating activities of 19,200, I then have my net cash provided by investing activities of 2,000. And then I have my net cash used in financing activities of 4,200. The drama, 17,000. So I just want to look at something real quick to make sure that this is, so let's see if your book did it any differently. For problem 5-6. So we had net income, gain on sale of investments, depreciation expense, 11, an increase in accounts receivable. Then we have sale of investments, purchase of land, and then we've got issuance of common stock, retirements of notes payable, and then a payment of a dividend. So we're pretty much in the same spot. So let's go ahead and just formalize this statement of cash flows. So we've got net income. This amount here will always, if it's a debit, it's a positive. So coming here. So if it is a credit, it's going to show as a negative on the statement of cash flows. So when I add these up, it should be 19,200, which it is. And we'll just move this up here. So my net cash provided by investing activities, or my cash flows for investing, sale of investments. So over here, and then my purchase of land is going to be a negative 13,000. So my net cash provided by investing activities is going to be 2,000. And then lastly, I'm going to get to my financing activities. For my financing activities, I had the retirement of a notes payable, I had the sale of common stock, and then I had the payment of a dividend. So here, this is going to be a negative because it's a credit. As this is a debit, it will be a positive amount. So my net cash used in investing activities is going to be a negative 4,200. When I add up 4,200 to 2,000, And then I'm realizing right now I may have made a little mistake. So when I add up these four amounts, 19.2. So when I add up 4,200, let's give ourselves a little bit more room. Okay. So the net cash used in financing, so the sum of these three values right here has to equal to 17,000. And let's just move this over a little bit just to make it a little bit more clearer in terms of how I'm going through and doing this problem. Okay, the last thing I need to do as well is that I have to list out this non-cash transaction, which is right down here. So that's going to be my statement of cash flows. So let's now go through and take a look at, they now want us to go through and to prepare an unclassified balance sheet. So the unclassified balance sheet, what that really is going to be is that we're not segregating assets between current and non-current, we're just listing them out. So that makes it a little bit easier. So we got here Lansbury, Inc. balance sheet as of 12/31/20. So I'm just going to go ahead and list out my assets. So my assets here are going to be cash. So my ending balance in cash was 37,000. I'll put in one more column over here. Okay. So next one over here is going to be accounts receivable. I'll hide this up. There we go. Okay, so I got cash. I have accounts receivable. My cash we said was, what did we say cash was? Cash was 37,000. Oh, already had it over here. Okay, so I got cash at 37. Accounts receivable is going to be at 41,600. Okay, the investments, see what this says about investments. Doesn't actually really matter how we're even classifying it. So over here, investments, 20,400. Okay, so here at the plan assets net, what I'm going to do is I'm going to combine these. So I've got plan assets. So my ending amount here in plan assets is at 70. I have land at 88,000. So I don't think I have any other assets. So my total assets here will be $257,000. For my next section over here are going to be my liabilities. Okay, so for my liabilities, I have accounts payable of 30,000, and I have notes payable of 25,000, and I have bonds payable of 35,000. What's interesting is that in your text, they just kind of group it all together. I would still, though, show total liabilities at 90,000. Owner's equity is going to be the common stock at 120. And then the retained earnings at 47,000. So my total owner's equity is going to be 167,000. My total liabilities and owner's equity is going to be 167 plus 90 or 257. So that's how we went through and did it. This is going to be a little bit different than the solution in the book, but it's something though that this is non-classified, so it's unclassified. So we're just basically showing that we're not segregating the current and non-current, the assets and liabilities in a current and non-current. So I hope you have enjoyed this video today, and I look forward to seeing you on the next video. Have a great one.